It's Jobs Friday, and we have the latest unemployment data out. It's not pretty, folks. We're looking at a number on the jobs gain of only 69,000 jobs. The unemployment rate has ticked back up to 8.2%. Just to give you put that in context, last month the unemployment rate was 8.1%. The expectation for the jobs gain this morning was 150,000. This is less than half that. Let's go right now to Sudeep Reddy in Washington. Sudeep, we were just chatting. You were right. You were really downbeat going into this. This is not a good number.
It's not a good number, and the really worrying part about this is that it's not a good number even before you fully account for the deteriorating global situation. Europe appears to be on the verge of a meltdown right now, and we've seen this over the last few weeks. All of this discussion is probably only going to worsen the problem. So we've seen now that we have the confirmed trend that payrolls have increased, job growth has decreased for the third straight year, and that the economy has been slowing. And that's even before you factor in the full effect of what's been happening abroad, and that is a huge problem.
Right. Sudeep, hold on one second. Let's flip over to Phil Izzo in the newsroom, who has the release digging into it. Phil, what's your initial read on the number?
Hey guys, this is really not a good number. The unemployment rate rose, it's up to 8.2%. It looks like the government cut jobs again. There were job gains across a bunch of sectors, but they were just really small gains. And with this kind of, we're adding over 100,000 people to the population every month, and 69,000 is just not going to cut it. We're essentially, it's a job gain, but it might as well be a job loss when you consider how many people are just coming into the labor force every month. And then at the same time, we're seeing like forward-looking indicators aren't looking pretty good either. We cut hours worked this week. That means that even though that companies aren't staffing up and they're also cutting hours for their existing employees, that's not a signal for more job growth coming in the future.
All right, Phil, we'll give you a moment, dig back into the reports. Sudeep, let's go back to you. Of course, the big question here now is, what does this mean for the Fed?
David, you can actually see the ship turning around right now very slowly at the Fed. They knew that job growth was going to be decelerating. Their big fear was that the unemployment rate would turn around and start rising again. We have confirmation of this. The Fed never reacts to a single month's number or even just a couple of months' numbers, but you can already see the trend going in the completely wrong direction. Add on to this the layer of what's happening abroad and the vast new risks that we've seen over the last few weeks, and this is going to incredibly ramp up the discussion about QE3, another round of bond buying from the Federal Reserve. Their meeting is in just a little over 2 weeks, and so Sudeep, they're going to have a big discussion.
That's a key point there. That I take your point that the Fed doesn't react to 1 month's number or just even 2 or 3 months. But this June meeting is crucial because it's really, once you get past the June meeting, the window for them to act without it looking like they're actually doing something in terms of the presidential race starts closing pretty rapidly.
Exactly. For the Fed to do something big in an election year, barring some global meltdown, is going to be a bit difficult. But the Fed can do two things. One is to just signal to the country and to the world that they're watching this very closely and that they're prepared to act. Just the indication that they're entertaining another round of bond buying to keep the economy afloat will actually provide some support.
Hold on one second there, because this is something I think that at this point confuses everyone. We've got, right before we got this number, the 10-year Treasury yield was 1.52%. The 30-year Treasury yield is around 2.6%. What's the point of the Fed buying more bonds? I mean, what do they think they're going to drive the 10-year down to 1%?
You could conceivably do that, and you have to remember that there are benefits as you push interest rates lower. There are diminishing benefits given other factors in the economy, but when you have some tools to act, you're likely to at least discuss using them, and there is some benefit of pushing interest rates even lower in a deteriorating situation. There's also the broader effect of if you're trying to push investors into other asset classes, that is the practical effect of what the Fed does. And so there are other issues, but the biggest issue is to make sure that the Fed signals that they are willing to take action. And there have been a lot of doubts in recent weeks about whether the Fed had been changing its mind about its eagerness to engage in this. And I think you're going to see some of that discussion change over the next 2 weeks.
All right, let's just briefly take a look on screen at some of the trends now that we've seen in unemployment. And let's go back to Phil Izzo in the newsroom. Phil, what other nuggets have you pulled out of the report now?
Yeah, again, just overall not a really good report. The revisions to the previous months were down, so we added even less than 100,000 jobs in April, which is even worse than we thought we saw last month. There's bad news across the board. With construction jobs took a really big hit. Manufacturing was up a little bit, but there's worries that we've seen some slowdowns in numbers in the last couple of months. That's definitely not going to hold up probably over the summer months. And then
Phil,
there is a tiny bit of good news in here. though.
One thing, Phil, before you get to that, what was the private sector job gain?
Private sector job gains were about 82,000. The government cut back about 13, so that's where we got the number below 70 was because it was more in the private sector, but still not good enough job growth in the private sector.
Okay, Phil, thank you. Final words, Sudeep. The Fed more likely to act. How do you think that this plays out politically for the markets?
This certainly changes the calculus in the election. The Obama campaign is going to have much greater difficulty arguing that they've engineered a turnaround. They will, of course, be arguing that a lot of this is due to problems overseas for the third straight year. But the fact remains that a slowing economy is not good for the incumbent, and it looks like we've got several more months of this before you have any prospect of a turnaround to see an increase again.